Okay, so I'm just going to mark up a few charts. It's going to get kind of repetitive, which is a good thing. I look for pretty much the same things on every chart. So what I will do here, actually, I'll leave this chart up, but I'll go to a different one, and we can go over what I look for when I mark up. So let's go to the forex.com chart. I think this is blank. Or we can make it blank. So first thing I want to, when I start looking at a chart, I want to look at the available history. So whatever that means. I'll mark the historical high, historical low on the available history. Usually that doesn't really mean anything because more often than not, we're not close to historical highs or historical lows, but it's a good thing to keep an eye on. Then I want to look at, when it comes to, let's go down to the weekly. On a weekly time frame, I want to look at trend lines and if there's any long-term fib levels or Elliott Wave that are in play. So right now, this has a pull fib from the high to low to this pair. We see that it's really playing around with the 618 level. We're seeing a lot of resistance here. We see it tapping there, and it's looking like it might be ready for a move up. Also, from the Elliott Wave perspective, if you see a 0, 1, or put it at 1, 2, 3, 4, 5. We put the 1 here. 0, 1, 2, 3, 4, 5, and then a corrective move would be 0. Looking for A, B somewhere here, and a C around here, give or take. A and the C can end up anywhere, the B can end up anywhere, but more or less we're looking for something like that. And we can see subwaves if we go down a little bit lower. One way to check your Elliott Wave is to use a fib retracement or a fib extensions tool. So the second Elliott Wave, the second wave I should say, usually is between 50 and 61.8% of the first wave. And depending on how you count it, you can still see that it ends up retracing about 60 or 50 to 61.8% of the first wave. You can see profit levels acting pretty well there. And then if you use a fib extension tool, which I don't use a whole lot, but I'm not sure how it'll line up, but we might be able to see a good extension that lines up with some fib levels. Yeah, so the 2618 level hits pretty well. The 3618 almost gets hit. So that's good enough for me to call this a 1-2. Wave 4 generally retraces around 30-ish% of wave 2. And we can see that the wave 4 is between 0.236 and 0.382. Still hitting the profit levels after that move. And wave 5 is oftentimes roughly the same distance as wave 5. And this one's a little bit shorter. This would have been a truncated fifth, but that's good enough for me. And so coming back here, let's draw our fib levels again. And we're going to have this big time fib. And we're not going to trade off of this because we're not going to trade with our entries off of this because this would be, enormous stop losses. It would be very long term. We do keep that in the back of our mind when we're looking at trades. So now when I come on a daily time frame, the first thing I do on a daily time frame is I look for key levels. So key levels would be pretty much where price is rejected as support or resistance multiple times. So first one I see right here is this area. You see multiple rejections here. We see, hold on. Let's look at this level right here. You can see multiple rejections off of this level. Same for here. We zoom out. You can see just a lot of rejection off of these levels. And that's important. It's important to see where price is getting hung up, so to speak, or where price is either hitting buys or sales. It's oftentimes going to be an area, not a key price, but if we keep in mind those areas, then we'll be good. And when I'm looking at the time frame, I also want to look at the recent or relative high, relative low. So for relative low, it'll be this level right here. Oops. Sorry. Try to use the alternate H. For relative low, it'll be this level here. and we mark these levels off. One thing that people who know me know that I like to do is I like to look at past fibs to see reversals. So if I pull this fib here, I see that this is pretty much an exact measured move. Off of these key levels, we had this move here to 0.5 to 236, which is a good sign of a reversal. Also, this key level here, it looks like it was a key level in the past. So this is a good sign that maybe these are on a way up. So after I've drawn key levels, I look to make trend lines, regression trends, that sort of thing, just to see the direction of the recent or relative market. So if I draw a trend line here, we'll see that this is maybe we might be able to get a pretty parallel channel. So looks like for the most part, this is a good, we're in a downtrend. I don't always try to make my channels parallel. I just kind of draw them as they are, because sometimes you might get a descending triangle and not even know it. So looking at this pair, we are kind of meeting resistance at this 618 level. So we could see a move down, but at the same time, just some fundamentals going on. We could be getting a double top here. The reason I say a double top here is because if you look at this level, pull this fib, this lines up with this key level and fib pretty well. Even though this wasn't this fib, this was a 0.5. So if I had to make a prediction on this trade, I would look for it in here. And I might be looking for a sell there. I'll kind of have to see when it happens. But for the most part, I like to go to level and see if it lines up with a fib. Key levels and price action are kind of first and foremost. And fibs are second. And I will, every pair that I look at, I will make a prediction on. I'll draw some arrows, but I only trade a few. And I go back in time and look at the predictions I've made, and I see where I made a mistake, how I'm improving, and what I can go better on. So that's EU. Let's go to GJ. I try not to look at too many USD pairs, too many Euro pairs in a row, because then you kind of get in a rut sometimes, and you might see the same thing over and over again. But if you go from pair to pair, or go from currency to currency, and then not in the same order, you might have more of a fresh set of eyes on this one. So it's been a minute since I marked this up, but so far I was right in this area, correct in this area. And what I saw here, just going back in time, was we had broken out of this trend, but I had this key level marked up on the daily. So rejection here, here, sort of there, here. So this, what price is this? It's 143.8. Essentially, it was a very important level. So at this point in time, when this week started, I was looking for it to come to this level and looking for a buy. If I remember correctly, or a move up at least back to retest the level. If I remember correctly, the reason that I was looking for its level, especially, was because we had this 618 kind of for added confluence right at this key level. So I was like, okay, this would be a good area to be looking for buys and to sell. But if you just waited for the buy and got out at this next key level, this would have been, 120 pip move, pretty easy. So now going forward to this next week, we've broken through the 71 and the 786. So now let's see if there's any other important key levels that we should be looking at for this pair. This is looking pretty special here. I'm just going to draw this line here. Actually, looks like the only time it hit, so maybe not. We'll leave it for right now. So just to here. As of now, looks like this is tumbling, but we can go on a smaller time frame to see if there's anything else we should see. So it's coming down really far, and when I see a pair that's kind of overextended to this point, sometimes I'll pull up divergence to see if there's anything there. I'm not a divergence trader, but sometimes it does make a difference, and sometimes it does matter. It's not the first thing I look at. It's not on my chart in general, but this looks like it. This isn't really divergence. It kind of is. This could maybe be a buy. I don't see a trade on it, but the what I would predict is a move up. And because of a move up, I will be looking for it to go to the next level. So maybe something like this. Not too far past the 0.5, and then I move back down, more or less. So we looked at EU and GJ. Let's look at NZDCAD. So once again, I'm going through pairs that don't have any of the same currencies. So I was dead wrong on this one last week, which happens, it's whatever. Let's see what I was looking at. I believe, so it actually did complete the measure move from the 618 to the negative 236, and it found resistance there. Maybe a little bit of divergence. Let's go on a 2 hour, maybe see a little better. Not really, but it did complete the measure move. That would have been, if you were in this trade, you would have had a perfect entry from this high to this low. You would have had to wait a few days because it would have played around with you. You would have had to wait a good while. But if you were patient, you would have never, your drawdown would have only been 3 pips, and you would have had to wait 4 days for a real move, but you would have gotten, your 150 pips in 12 days. But anyway, I want to say at this point, I was looking for a double bottom. I saw that was hanging up here, and I was looking for it to come back up to this level and retest it. It didn't. It went down, which is fine. We can delete these. And let's see. If I draw some trend lines, let's go back up to the daily. If I draw trend lines here, I'm using the parallel channel just because it makes it pretty. It's not necessary, but actually I'm not gonna use a parallel channel. Because this has like some really big wicks, I'm actually gonna use a regression trend from the top of this. The regression trend is an interesting tool because it uses pretty much standard deviations in math to find the actual slope using midpoints or something. I don't know, but it's pretty cool. The only thing I don't like about it is that it has a really thick background, which I'm not a big fan of. So I usually fade them out a little bit. I'll be honest, I don't see much of a trade here. I can't even really make a prediction on it. But the trend is your friend. So I'm gonna pull this fib from this high to this low, see if I see anything. Not really, but it's headed towards this key level, so I'm predicting it hits this key level and goes back around, which would be towards the top of this regression trend. So we're gonna look for this. We'll see how we did at the end of the week. Maybe another trade will appear. So let's extend these lines. Yeah, looks a little bit better because the midline will play out a good bit. Let's look at EU. We've looked at GJ with the NZDCAD. Let's look at Euro. Chicken finger. Okay, this was a trade I took last week, and it was a good trade. Pretty solid. High, low, 618. Actually, no, I lost this trade. Actually, I got stopped out. I forgot. Stopped out by 5 pips. Stop was too tight, but still made the measure move. Sometimes you lose. Could delete some of these. Looking at this on a daily, this is a really big candle here. I can delete this because it's broken through it. Just looking at this key level here, or this key level I've drawn here, I want to see where that lines up with this current fib. So I'm pretty sure that's 618, just eyeballing it. And if it is, I'm going to want to be taking it out 71. The 71 is a level I've been playing with. I haven't quite gotten the handle on it, but it does line up a good bit. Because this trade is so big, it will have a really big stop loss. Oh, actually, not too big, 60 pips. This is a trade I can see myself taking. But because this 71 is or this key level is a little bit closer to 71, the trade I would probably take would be closer to this. Instead of 68, I will either just kind of watch it, or I'll trade off this key level and stop around here for 40 pips. And your target is going to be equal highs, -236, -618. So the target will be something like this. Because we're on a daily, this would be a very long time frame trade, especially because chicken finger or Swiss franc moves very slowly. But you know, that could be a good pair to try to trade. Looking at US oil, I'm not gonna go over every pair. I usually take about 3 hours, 2 or 3 hours to every pair. I'm not gonna do that, but I just kind of want to go over a few and see like how I trade and how I market my charts. On a very huge time frame, this big 618 or 71 kind of respect it, and we're looking on the way down. Right now, we're looking really, really choppy, really sideways movement. I'll pull a fib here. And it's kind of wicked out the 71 and 618 area for a big move down. But eyeballing this, it kind of looks like wick off. So nothing much in the way of divergence though. So I'll just keep an eye on that. Let's look at gold. So gold's in a down channel, and it definitely broke out of it. It's at the 78.6 and hit a key level here at like 1302. This is an interesting one to watch because looking at this is wick off. Like this is straight up wick off, and delete this to kind of show you what wick off is. So we see a selling climax, automatic move, a spring, and a move up. So this will be selling climax, which is basically where to move in, where the sellers take their profits. After the sellers take their profits, because nobody's selling, there's going to be an automatic move up, or automatic response. After the automatic response, it's going to be the accumulation of buys. After accumulation of buys, oftentimes you'll test the level or a little bit below the level, just the general area. We call that the spring. After the spring, we're kind of on our way. This move out of this box, let me draw some rectangles. So this is like our consolidated area right here. This is where the accumulation is happening in this area. Once it breaks out of this area, we call this a sign of strength. Sign of strength, SOS, means we kind of change direction and we're going up, we're on the way up. Oftentimes after the sign of strength, it will come back and test this level. So what I'm looking for is a move down. Got the spinning wheel. All right, we're looking for a move down in the general area, maybe test the top of the wicks, and then we're moving up, like up. So wick off generally is accompanied by divergence. So if you pull up the ray, 1 second. Pull up the ray, we'll see divergence here versus like not strong divergence, but it is not as steep as it is down here. So this is pretty parallel, and this is pretty slight divergence. In 2 hour, I think it's a little bit more pronounced. This is like straight across, and this is up. Or we can pull it from where it actually is. Maybe not. Maybe it's flat across. Whatever. Which is why I don't like divergence, because it changed with the time frame. I don't like indicators that change with the time frame. So like I don't use a lot of moving averages or anything unless they're on a really big time frame. Let's go back to 4 hour. So I'm looking for a move down here. Let's pull a fib right quick to see if it's at a key level. I want to say that might be the 886. That shit might be too close. Let me double check. Nope. Okay, but key level I've already marked off. If we pull this fib down, I'm looking for a buy. Where should I pull it from? I can pull it from here. I can pull it from here. I can pull it from here. Because this is a move. This is a move down. This is a move up. This is a move down. This is a move up. This is a move down. Let's just see where it lines up if I pull it here. So here it's 71.61.8 lines up to these wicks. So this will be the trade. I actually might be taking this trade. Stop loss here. Oops. 50 pips up, give or take. Target and TP2 here. Good trade. Let's look at one more pair. Let's look at EURAUD. I've had good success with this one recently. Let's see. Let's delete these, these are done. So this was a good example of wick off previously. These are a good example of fibs really playing out. So good wick off is selling climax, automatic response, come back down, test this level, spring. Failed sell off is what FSO stands for. So it's pretty much like a second spring, accompanied with wick off. And then you see a sign of strength out of this level, retest this level. I actually took this trade here, and then move back up. It hits a pre-selected key level here. Probably could have had this key level drawn here too. Right after this, these two wicks here. Resistance there. Move up. So this is Elliott Wave to the fullest right now. And I'll mark it off on 618. I guess perfect. So this chart's about to get busy, but we have one, 2, 3, probably 3 here. Looking for maybe 4 and at least a 5 above that. So I think it's a move down. Where it will retrace to the 4 is tough to say. Like I said, usually around 30-ish% of wave 2, which would be this key level. So delete these arrows. And I'm looking for this to come here off this key level and maybe back to complete this move. It'll be tough to trade because where you put your stop loss, I'm not sure, but I do see that happening. We'll call that it for now. It's 20 minutes. I'll be looking at more pairs, but it gets repetitive and redundant. Like trend lines on the daily and weekly, key levels on the daily. Look for active fib, look for a wick off. Let's look for price action. Have a good week, guys.